But you got other guys like James Rickards who is using different numbers and would say something along the lines of 24,000. Is that crazy? Well, I don't really think it's crazy. Yes, so I would say it's certainly a possibility. I think it's uncanny that the name of the account it's held in is the gold revaluation account. That is the name of it. Can't make it up. So yeah, I think it is on the table. I think that the bottom line is this is the system that's based upon trust first and foremost, and um, I think you kind of look at like the concept of the fourth turning, a system that is kind of marked by a loss of trust and trust in institutions, and the more I think about the concept of the fourth turning and where we are in the cycle, it just seems to me that this is much bigger than just these particular tariffs. It's been a string of things that have been done that have eroded the trust and confidence not only in the institution of the United States government through things like sanctions, tariffs that are masquerading as sanctions, but also the irresponsible monetary and fiscal behavior, the massive indebtedness that seems to be continuing even in the face of Doge, which really hasn't amounted to much of anything. A couple hundred billion, they thought they'd get a couple trillion, and yet the trade deficit or the budget deficit rather continues to grow, and over $1 trillion military bill that is discretionary, borrowed, in other words. So the whole thing is much deeper than just these tariffs. I think the tariffs accentuate the problems, and the problems are of lack of trust. The problems are of going around and bullying the world and right, wrong, or indifferent. The problems are of fiscal and monetary irresponsibility, a massive growing indebtedness. Um, these problems are much deeper than the tariffs would portray. And I think really what they are doing is bringing into focus to the world that perhaps it's better to, focus on building relationships within your own ecosystem. In other words, trading with local currencies, the way that many of these countries are doing. Um, you're beginning to see the demand for trading in other currency pairs and trading in local currencies and settling in other things other than the United States dollar for these reasons. So, yeah, I look, part of me wants to be very optimistic at the same time, Mario, and I understand what he's trying to do. There is no question, above all else, there is no question that, you need to protect your strategic industries. And I understand that. And maybe that's what he's trying to do. Pharmaceuticals, semiconductors, steel, critical manufacturing, all that stuff needs to be done. Sure. But I think this is going well beyond that. And I think it's kind of creating more of a, maybe incentivizing more of this de-dollarization and move away ultimately from the dollar as the single solo center of the universe world reserve currency. So I don't know if that really answers your question, but I guess I would just simply say I'm not very optimistic that we see smooth sailing in the economy here in the United States moving forward for a very, for at least the foreseeable future. With that being said, in the end, there's no question that we have to transition to these critical industries being brought back home. But I guess I would just say this is going far beyond that. Well, I think that it appears much of the world, at least the southern hemisphere, is moving towards a system of trading in local currencies and settling imbalances in gold. And I think you can even hear rumblings out of the White House with dissent saying that, maybe the era of being the solo reserve currency needs to come to an end. I mean, you could make a strong argument for that. It doesn't have to be a complete and total gold backed system the way that it was, but trading in local currencies and settling imbalances using things like gold would be a good start. There's no question that um, what it appears he's trying to do is make an investment in the long-term strength and sovereignty of this country. Um, National security kind of thing. The outsourcing that we've done forever has certainly made things much cheaper, kept interest rates low, asset prices high, allowed us to live beyond our, maybe arguably beyond our standard of living, but it leaves us exposed. So there's no question that this needs to be done. Um, and you could argue that maybe this is part also of that theory of that being the world reserve currency because of, um, you know, just the reality of the fact that if you are the world reserve currency, you have no choice but to run trade deficits, and that's not really good for it hollows out our manufacturing over time. And maybe that's really exactly what they're trying to do. They're trying to maybe they realize Triffin's dilemma is something that they want to break away from and to incentivize the world to move away from the dollar as the sole settlement currency. And maybe that has something to do with all the gold that's been brought back and imported record amounts of more than we've ever seen before. Um, Maybe that has something to do with it. Maybe they plan on issuing some form of a gold-backed trade settlement vehicle like the BRICS are using, or just to simply have the rest of the world no longer rely upon the dollar as the world reserve currency, and to usher in some sort of a controlled reset. I mean, I don't know. A lot of these questions are very, very difficult to answer, Mario. And there's so many things that seem to be happening at the same time that are unprecedented. In April, we saw COMEX delivered 64,514 gold contracts at 6.45 million ounces of gold, or 21.3 billion. It's the second highest delivery on record. And since November, we've become a net importer. Since January, we've imported more gold than at any time since World War II, when most of the world sent us their gold. It was the Bretton Woods Agreement. And at the same time, you had 10,000 new delivery contracts that were open after the first day of notice. That's the second highest on record. I mean, there's all sorts of things going on here, whether it be things that are incentivizing the world to move away from taking the dollar, to massive gold coming in, making it seem like Judy Shelton might be right, where we're planning on backing some sort of a system with gold, whether it be 50-year treasuries or something a little bit more grandiose that we're not thinking about. But I don't know. I would just simply say that it seems that we're getting to the end of a cycle and it's time for some big changes. And I think we're going to see some big changes, whether we are at the driving, whether we are the driving force of these changes or we are kind of trying to play catch up remains to be seen. But no, I think the current system, the way that it is going to change, and what that looks like, I don't know, but I do believe gold will be somewhere tied very closely to whatever system that is. Well, yeah, I mean, look, maybe the world understands that the dollar's lost 99% of its value since 71, when gold was 35 bucks an ounce when they closed the window. And here we are now at 3,300. I think it's arguable that the petrodollar has died, Mario. I mean, I think that, you see BRICS actively selling oil and trade in yuan and gold, and it's the dollar's not the only game in town anymore. And I think the world understands that. And it's more along the lines of getting it in your hands instead of trusting the system. Gold is no longer just a hedge. I think it's being positioned or repositioned kind of as the future foundation of trade and monetary stability. I don't know what it looks like, but at the same time, you got the Fed coming in and buying 20-30 billion dollars in 3 and 10-year treasuries to stabilize the back end of the market. No one wants our treasuries. Instead, they're buying gold. So who would it benefit if we revalued gold? I mean, who's been buying it all? It's been the central banks. And who would it benefit? Well, it would benefit them specifically, and the BRICS nations, and now it would benefit the United States. People talk about revaluing it just to the market to market, which isn't going to do that much. It gives the Treasury 800 billion as the Fed would issue new gold certificates, or the Treasury would, and give them to the Fed, who would give them $800 billion. And by the way, when the Fed takes those gold certificates, it doesn't give them right to the gold; it gives them right to the cash equivalent of it. So that's why I think you have a lot of people talking about revaluing it to some metric much higher than the marking it to market at 3,300 or whatnot. It's at 42.22 on the balance sheet. In the UK, it's 35 still, the old Bretton Woods price. But, if you take let me look at the numbers. I had jotted these down recently. If you look at the numbers, at least in terms of M1, it used to be backed by M1 a long time ago. Prior to 33, gold didn't back M2, just M1, which is the notes in circulation. M2 would be like when you look online at your bank account and shows the money in there, it's 92% credit. That number the bank promises to pay you in Federal Reserve notes, in theory, but it's just a number on the screen. Until then, it's credit. So, anyways, using the M1, which is what Mike Maloney talked about, you have M1 of 2,365,000,000,000. Divided by the 261 million ounces is $9,044. If you did that, every $4,000 increase would give the Treasury general account 1 trillion free and clear. It would give them, over $2 trillion to work down the debt, to back, to back the 50-year Treasury, to do whatever, as Judy Shelton would say. But, you got other guys like James Rickards, who is using different numbers and would say something along the lines of 24,000. Is that crazy? Well, I don't really think it's crazy. Yes, it would create a bunch of inflation. Yes, it's kind of a gimmick in that respect, but it would also allow us to not only start to work down the debt, but also to issue treasuries that would be pegged to gold, because you really can't do it at this level. The gold will just get siphoned away. So I would say it's certainly a possibility. I think it's uncanny that the name of the account it's held in is the gold revaluation account. That is the name of it. Can't make it up. So yeah, I think it is on the table. It is something that they think about, and I think it would benefit ultimately the central banks. It's no more silly than seeing Bitcoin at $100,000, quite frankly. And the central banks of the world own far more gold than they do have any exposure whatsoever to Bitcoin. So could it happen? Yes. Do I think it will? Maybe. And I think it's ironic that it's held in the gold